Dear students, I am Dr. Panduranga Nayak, Principal of Swiss College, Bangalore. When I started the salary chapter, I told you the total salary consists of four components. Number one, basic. Number two, allowances. Number three, perquisites. And number four, profit in lieu of salary. Yes, basic you know already. For example, the scale of the employee is 10,000 dash 500 dash 12,000 dash 1,000 dash 15,000. This is the scale or salary grade, or what we call salary grade. So when you join the organization, your basic salary will be 10,000. Once you complete 1 year of your service successfully, you may be given 500 rupees increment. As a result, at the beginning of second year, your basic will be 10,000 plus 500, 10,500. And when you complete second year, you will get another 500 increment. So 10,500 plus 500, 11,000. Like this, every year you will get an increment of 500 that will be added to basic. And this will go on until you reach 12,000. Once you reach 12,000, the next increment will be not 500, it will be 1,000. And this will go on till you reach the scale of 15,000. Of course, when you reach 15,000, in between there might be revision of pay scale. Anyway, that's about basic. The next one, allowances. Now we'll take up the terminology allowances. It's an important component of salary. What do you mean by allowance? So allowance means anything paid in addition to basic. It might be paid monthly. Normally it is paid in monthly, and it is paid in cash. So payment in cash made by the employer to his employees monthly other than salary is called an allowance. So allowance is the payment in addition to basic in cash. It is a fixed sum of money paid by the employer to his employee in order to meet certain expenses incurred by him for discharging his duties. So what's allowance? Allowance is any payment made by the employer to the employee in cash, and it is in addition to basic. And why it is allowed? In order to meet certain specific expenses incurred in the discharge of his duties. Now there are different types of allowances. First one, taxable allowances. Second one, allowances exempt up to a specified limit or certain limit. Third one, fully exempted allowances. First one is fully taxable. Third one is fully exempt. In between, allowances exempt up to a specified limit. That means partially that's exempt and the remaining part is taxable. We'll take the first one, taxable allowances. So here, whatever allowance is granted or provided under this head, they will be fully taxable. Dearness allowance and dearness pay. What is dearness allowance? Dearness allowance is paid in order to enable the employees to compensate the rise in the price level. You know very well, prices do not remain the same. When there is increase in the prices, in order to compensate the employees to meet the increasing prices, dearness allowance is granted. ಕನ್ನಡದಲ್ಲಿ ತುಟ್ಟಿ ಭತ್ಯೆ ಅಂತ ಹೇಳ್ತಾರೆ. It is included in the income. It is included in the income from salary and is taxed fully, because the very heading is said like that, taxable allowances. Therefore, it is included in salary and it is fully taxed. It is included in salaries for computing rent-free accommodation, house rent allowance, provident fund, etc. if it is considered for retirement benefits. See, The concept salary does not remain the same for all purposes. Sometimes salary means basic plus DA. Sometimes salary plus basic plus commission based on turnover. So that way, for different purposes, salary has got different interpretation. So here, if the salary is considered for retirement benefits or computation of retirement benefits, then salaries include rent-free accommodation. Salaries include dearness allowance for computing rent-free accommodation, HRA, provident fund, etc. What is dearness pay? Normally, DA converted into dearness pay and it becomes part of basic salary. But regarding dearness pay, there are different interpretations. So don't bother about the differences. The thing is, uh, if dearness allowance and dearness pay are considered for retirement benefits and it's given specifically, then only that you better take that under rent-free accommodation, HRA and provident fund competition. Otherwise, you don't consider that. But anyway, DA or dearness pay, that is part of salary for tax purpose. Alright, next, city compensatory allowance. So in big cities, the cost of living will be very high when compared to other smaller cities. So in order to meet the increasing cost of living in big cities, an allowance is granted that's called city compensatory allowance. That's fully taxable. Fixed medical allowance. Okay, so that's taxable. Tiffin allowance. It's also called lunch and refreshment allowance. And it's given for lunch and refreshments to the employees. It is also called meal allowance and refreshment allowance. It's fully taxable. Alright, servant allowance. Service of the servant might be given to the employees and in order to avail the service of the employees, an allowance might be given and that is called servant allowance. It's fully taxable even if it is given to low paid allowance, not being an officer. So it is taxable for all categories of employees. Non-practicing allowance is given to those doctors who are in government service and not allowed to do private practice. It is fully taxable. You can understand in any government hospitals, doctors, they may go for private practice. But sometimes you may prevent them from going for private practice. But in the meantime, you compensate them by giving them non-practicing allowance. That's also fully taxable. Hill allowance. It's given to employees working in hilly areas on account of high cost of living in hilly areas as compared to plains. It's fully taxable if the place is located at less than 1000 meter height from sea level. Okay, so that's about hill allowance. Next one is warden allowance and proctor allowance. So warden, he is normally working in hostels and he is looking after the inmates of a hostel and looking after the administration work of the hostel. Proctor allowance. Proctor means one who is entrusted with the responsibility of looking after the discipline. So, warden allowance and proctor allowance, both these are taxable and these are given in educational institutions for working as a warden of the hostel and or working as proctor in the institution. These allowances are fully taxable. Deputation allowance. When an employee is sent from his permanent place of service to some other place or institution or organization on deputation for a temporary period, he is given this allowance. It is fully taxable. For example, you are working in a particular place and sometimes in the nearby branch, somebody might go on leave, for example, for on maternity leave. A lady who is working there might go on maternity leave, maybe for 2, 3 months or 4 months. During that period, uh, you might be deputed to that branch, and it's a temporary transfer. And once the lady who comes back after maternity leave, you will be retransferred to your original place. So deputation allowance. Okay, that's also fully taxable. When you are deputed to some other place temporarily, you might be given additional allowance, and that's called deputation allowance. Overtime allowance. Sometimes employees may be asked to work on overtime basis in order to meet the increasing demand for your product, or to meet the increasing demand for services. In that case, you may be given extra allowance for working overtime. That's called overtime allowance. That's also fully taxable. Other allowances, apart from these fully taxable allowances, there are some more allowances. For example, family allowance to armed personnel while on the field without family. So, armed personnel might be in the field, working on the field, and their family may not be there with them. So, to compensate that, they might be given family allowance, that's fully taxable. Then project allowance, they will be on a project. In order to complete that project, they might be given an allowance, project allowance. Marriage allowance, when an employee marries for the first time, okay, as a facility, he may be given marriage allowance. Rural allowance, sometimes, for example, doctors or some employees, they may resist from going to the rural areas because there may not be enough facilities for themselves or for the children, or like that. So in that case, to compensate them, rural allowance might be given. Then telephone allowance, educational allowance, dinner allowance, health allowance, holiday allowance, special qualification allowance. If you, for example, achieve a special qualification, then an additional incentive might be given, and that's called special qualification allowance. For example, in banks, if they complete, if they pursue higher studies, sometimes they might be given additional increment. That's called special qualification allowance. For example, in colleges, professors, they may pursue PhD study. On the completion of PhD study, they might be given some allowances. That is a recognition for your additional achievement in qualification. So all these are taxable unless specifically exempt. We'll pass on to the second category, allowances exempt up to specified limit. These are neither fully taxable nor fully exempt. They're exempt up to a specified limit or certain limit. First one, house rent allowance. House rent allowance is granted to an assessee by his employer to meet the expenditure incurred on payment of rent in respect of residential accommodation occupied by him, and it is exempt up to a certain limit. How it is calculated? As per rule E, the least of the following clauses will be exempt HRA. The remaining HRA will be taxable. Number A, HRA actually received by the SSC. This is one clause or one condition. Or rent paid in excess of 10% of salary due to him for the relevant period. So, rent paid in excess of 10% of salary due to him for the relevant period. Third one, if the accommodation is situated at metropolitan cities, one of the metropolitan cities like Mumbai, Calcutta, Delhi or Chennai, 50% of salary due to the SSC. Of course, once again during the relevant period. If the accommodation is situated in any, it should be any, at any other place, 40% of salary due to the SSE. So, out of these three clauses, which one is least, that is exempt, the remaining amount is taxable. Here, relevant period. What is meant by relevant period? For example, in a year, out of 12 months, first 4 months only you are in your rented house, and then you will move to your own house. Then the relevant period here means only 4 months, not 12 months. So that is the meaning of it. In case of an employee, in case an employee is living in his own house and is getting HRA, or is living in a house for which he is not paying any rent, full amount of HRA receivable is taxable. So if you are in your own house, or you are in a house where you are not paying rent, then whatever HRA you receive from the employer, that's fully taxable. Now, entertainment allowance. What is entertainment allowance? Entertainment allowance is the allowance given by the employer to the employee to keep the visitors comfortable and happy. For example, there might be valued customers coming to your organization. For example, if yours is a bank, some valued customers who keep high deposit or who are very prompt in their payment of loan borrowed. So in that case, you may provide them tea or refreshment, etc. whenever they visit your office. So to meet those expenses, you might be given entertainment allowance, and it is included in the salary income under section 15. It's taxable, fully taxable. Then deduction is allowed under section 16 subsection 2. There are three deductions under section 16 from the salary income. Number one, that is standard deduction. Number two, entertainment allowance. Third one, professional tax. Okay, entertainment allowance is one of the deductions, and deduction is, once again, there are three clauses. The least one is exempt, like actual entertainment allowance received, and then second one is 1/5 of salary. Salary here means only basic, and then next rupees 5,000. Out of these three, whichever is less, that is exempt. This point I have already explained earlier while telling you what is salary and how to compute taxable salary. Next, third one is special allowances for meeting expenditure. Special allowance which are exempt from tax while computing income under the head salaries have been notified by the central government. There are two types of special allowances, namely those which are exclusively to be incurred on the performance of duties of his office. So only when he performs his duties, whatever expenses are incurred to meet those expenses, yes, allowance is allowed, special allowance. And if you spend the entire allowance, it is fully exempt. If you spend part of that, to that extent it is exempt, remaining amount is taxable. Okay, second category is those which are to meet the personal expenses. These are exempt up to a specified limit. This is as per section 10 subsection 14. Now let us take a point E, means those allowances which are exclusively to be incurred in the performance of his duties of office. Under that, so these are exempt to the extent actually spent for official purpose. Traveling allowance. So traveling allowance means what? It is given for the employee to enable the employee to meet outstation traveling for discharging official duties. He may have to leave the place of his basic work, and he may have to travel. In that case, traveling expenses he incurs for discharging official duties. That includes For example, some paid in connection with the transfer, packing, transportation of personal effects on such a transfer. Not only traveling for official purposes, but that includes even the amount paid in connection with transfer, packing, and transportation of personal effects on such transfer. Unspent amount is taxable. Supposing the employee is given traveling allowance of say 2,000 per month, that means 24,000. Of that, if he spends only 20,000, 20,000 is exempt. Remaining 4,000 is taxable. Daily allowance. Daily allowance is given to an employee while on tour or on transfer in order to enable him to meet daily charges incurred by him on account of absence from his place of duty. He may have to go on a tour. That is official duty only. In that case, he might be away from his place of duty. So he has to meet daily expenses outside his place of duty. Therefore, to meet the expenses spent for official purposes is tax-free. If any amount is unspent, then it is taxable. Conveyance allowance. That's nothing but transport allowance. It's given in order to enable the employee to meet conveyance expenses incurred in connection with performance of his duties pertaining to the employment. In connection with employment, he may have to travel. And the conveyance expenses spent for discharging official duties, that extent it is exempt. Otherwise, it is fully taxable. Helper allowance. So, you may take the help of some employees in order to perform the official duties. So, that is fully exempt if the full amount is spent. If any part of that is unspent, that is taxable. So what is helper allowance? This allowance is granted to meet the expenditure on a helper where such helper is engaged for the performance of duties of an office. It is exempt to the extent of actual amount received or the amount spent for that purpose, whichever is less. Okay, academic allowance or research allowance. So this allowance is granted to encourage the employee to undertake academic research or other professional pursuits. For example, for college lecturers to pursue additional allowance might be given. To pursue PhD or other high studies, they might be given additional allowance. That is taxable if the entire amount is spent. If any part of that is unspent, that is taxable. Uniform allowance. In some organizations, employees have to put on uniform, and for the purchase of a uniform or maintenance of the uniform, in the process of wearing that in the performance of official duties, the allowance given is or granted is fully exempt if amount is fully spent. Any amount is unspent, then it is taxable. Okay, so this is about allowances given to the employees to discharge official duties. If the amount is fully spent, exempt. Part of that is unspent, then unspent amount is taxable. Or it is spent but not for official purposes, then only to the extent it is spent for official purposes, it is exempt. The remaining amount spent for private or personal purpose is taxable. Next one, special allowance to meet the personal expenses. So these are not totally taxable, not totally exempt. So normally these are allowed to compensate the employee from the increased cost of living. Any such allowance granted to the assessee either to meet his personal expenses at the place where the duties of his office are ordinarily performed by him, or at a place where he ordinarily resides, or to compensate him for the increased cost of living, and will be exempt from tax to the extent notified by the central government. So central government from time to time may notify that what part of the allowance is exempt and what is taxable. So as per the notification, whether the allowance is taxable or not is being decided. Okay, let us consider some of the allowances. Special compensatory allowance. Under that, for example, hill compensatory allowance or high altitudes or uncongenial climate or snow-bound area or avalanche allowance. So these are exempt and the exemption varies from rupees 300 to 7,000 per month depending upon the height or the altitude where he performs his duties. The allowance may vary. So it varies from 300 to 7,000 per month. Yes, so high altitudes or uncongenial climate or snowbound area or avalanche allowance. So the exemption varies from 300 to 7,000 per month. Similarly, special compensatory allowance may be granted in case of border area, remote area, difficult area, disturbed area. Allowance is granted to the employee. Here again, exemption varies from rupees 200 to 1,300 per month. Tribal area allowance. So this is in certain places of certain states, not all the places in all the states. So places in MP, Madhya Pradesh, Tamil Nadu, Uttar Pradesh, Karnataka, Tripura, Orissa and Bihar states, and the amount is restricted to 200 per month. Next one, any special allowances granted to an employee working in any transport system. So in this case, he will be away from the his native place, and therefore he incurs certain additional expenses, of course on personal account. So in that case, he might be given some allowance, that is 70% of such allowance or rupees 10,000 per month, whichever is less, that is exempt, the remaining amount is taxable. So what is allowance granted to an employee working in any transport system? That is any allowance granted to an employee working in any transport system to meet his personal expenditure during his duty performed in the course of running of such a transport from one place to another. For example, in the case of tour services, employee might have to travel and he'll be away from his normal place, and when he is on tour, though allowance is granted to him to discharge official duty, he may incur certain personal expenses, and to meet those personal expenses, the employer may provide an additional allowance. And what part of that is taxable? 70% of such allowance or rupees 10,000 per month, whichever is less. Children education allowance, it is exempt the whole of India at rupees 100 per month per child up to a maximum of 2 children. This is an important item while solving the problems on salary. You will come across this. Children hostel allowance. Any allowance granted to an employee to meet the hostel expenditure on his child, exempt in the whole of India at rupees 300 per month per child up to a maximum of 2 children. Allowance might be given for more than 2 children, for example 3 children, but exemption is available only for 2 children, that too per child 300 per month. In the case of education allowance, it is 100 per month. So there also allowance might be granted for more than 2 children, but exemption is available only for 2 children. Then transport allowance. So transport allowance granted by the government to its employees or by an employer to employees by whatever name called to compensate them for cost incurred on account of commuting between the place of residence and the place of duty. For example, your residence might be maybe 20 kilometers away from your place of duty. So daily he is commuting. So for commuting, he may incur certain expenses. So that is provided in the form of transport allowance by the employer. And it is exempt up to a maximum of 1,200 per month. Of course, recently standard deduction is allowed in the case of salaried employees. Earlier standard deduction was not allowed under section 16. Recently it has been included. But when standard deduction is allowed to the employee, transport allowance is disallowed. And therefore, with effect from assessment year 1920, transport allowance is not exempt. It is fully taxable. It's fully taxable. But this does not apply. This does not applicable in the case of blind or deaf or dumb or orthopedically handicapped employee. So the transport allowance granted to him shall be exempt up to rupees 300 per month, 3,200 per month. So only in the case of other employees that is not applicable now. It's fully taxable. Whereas in the case of specially abled persons, it is exempt up to rupees 300 per month. Underground allowance. So those employees who are working in uncongenial or unnatural climate in underground mines. So the working environment is not at all conducive for working, not at all congenial, not at all healthy. It is unnatural also, not normal. So when he works in such situations, whatever allowance is given to him, that's exempt up to a maximum of rupees 800 per month. Special allowance to members of armed forces for working in high altitudes. So rate varies here. Then special allowance to defense personnel in the nature of highly active field area allowance. Active field area allowance is exempt up to rupees 4,400. Okay, now we'll move on to fully exempted allowance. Okay, foreign allowance under that. So those employees, government employees, government employees who are Indian citizens but working outside, rendering the service to the government abroad. It is not at all taxable. It is fully exempt. So we first considered fully taxable allowance. Next one, taxable up to a certain limit. Third one, fully exempted allowance. These are fully exempt, not at all taxable. So in the case of employees who are working for a government outside India, and these may be several types of there may be several types of foreign allowances, like overseas allowance, children education allowance, car allowance, entertainment allowance, etc. This exemption is not available to non-government employees and to those who are not citizens of India. So two conditions are to be satisfied. One is citizens of India, second one government employees. Then second one, sumptuary allowance to High Court or Supreme Court judges. So that is fully exempt. Next one, allowance from UNO, United Nations Organization. Allowance paid by UNO to its employees is fully exempt from tax. Per diem allowance. If per diem allowance is paid for the purpose of use of hotel, boarding, and lodging for lodging facilities to an employee, any surplus accruing to him from such allowance is exempt from tax. Then last one, salaries received by a teacher or a professor from SAARC member like Bangladesh, Bhutan, India, Maldives, Nepal, Pakistan and Sri Lanka. So if he or she is the resident of the member state means either one of the states, India, Maldives, Nepal, Pakistan, Sri Lanka, member state, and he or she visits member state during the previous year. So, like that, these are coming under fully exempt allowances. So, these are the different types of allowance. Allowance means anything paid to the employees in addition to basic, and that is paid in cash. Normally, that is in the discharge of his official duties. Sometimes it might be allowed to meet his personal expenses, but while performing his official duties. Thus, there are three categories of allowances. One is fully taxable allowances. Second one is allowances exempt up to a certain limit. Third one is fully exempted allowances. So for today, that's enough. Thank you very much for listening.